The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Now, Larry Pesavento.
Hey, looking good, Billy Ray. Feeling good, Lewis. Well, as most of you recognize that music from Trading Places, it's from Mozart. And it's a very, very great movie if you never get a chance to see it, but really good. I remember going to Mozart's home in Salzburg, Austria, and it's really an incredible place. I mean, this guy was really a pretty smart dude. He was composing stuff when he was 4 years old, so he's a pretty smart guy. Definitely a savant. Anyway, we're going to take a look at some things today. The first chart that I've posted in here into Tiger TV today was by request. I tried to talk about this yesterday. Evidently, I didn't do a very good explanation of it, but what it is, it's a chart showing the Commodity Research Bureau index of what commodities are doing. That's the blue line versus the dollar index. And all I did was we inverted it, because when commodity prices goes down, it's because the dollar is strong. And that has a very high correlation, as you can see. This is what we have going on right now. We have a strong dollar. It's almost near 100 in the dollar index, which is quite high compared to the fact that it was just a few years ago, back at 73, when Tom O'Brien, coined the term King Dollar, and that's what turned the market. So what this means is that as the U.S. dollar gets stronger, commodity prices get cheaper, and that's one of the things that the Federal Reserve is worried about, is deflation. It's totally different than where we were in 1980 when we had Paul Volcker as our Federal Reserve Chairman. It was the worry about inflation, because inflation was around 10 or 12%, and we were having the whole world falling apart with the Iranian crisis, with the hostages and stuff. So not much a lot different. I mean, we got the same type of crises today. They just put different labels on them. But we'll have to wait and see how this comes out. But that's what that basically means. This is the quagmire that the Federal Reserve is operating under, because if they raise interest rates, that makes the dollar get even stronger, which would also put even more pressure on the commodity prices. Now, we know that we're getting close to a large ABCD pattern in the commodity index itself. I'm expecting it to sometime maybe around January or February. We might be getting it, because we still got some more to go on the downside in copper and potentially oil, and a few of these other things that are there also that could be moving around quite a bit. The other thing is that we have to remember is, even though the prices are dropping, we're not getting any benefit from that, with the exception of oil. Gasoline prices are a lot lower. But if you go into the supermarkets, a pound of bacon now is only 9 ounces. It's just they just cut back the size of it. So we're not getting a lot of breaks in the supermarket. We are in some, in vegetables, of course, and eggs have come down about 40%, because, eggs are basically nothing more than recycled soybean meal. So those have come down quite a bit. But overall, it's very, very very, very expensive. In fact, one of the things, it's just Sarah and I here in Tucson, and when we go to the market, the one thing that I remember, we have a little basket of things that we buy. We only live a couple blocks from the big supermarket here. And we see a family of a lady with a little toddler, with 2 carts of stuff, and she goes through the checkout counter, and her bill is almost $400. And I asked her, I said, how long does this usually last you? She said, well, we hope to be at least a couple of weeks. And I was looking at it. I said, wow. I said, I can't believe the cost of some of the things. But that's neither here nor there. But anyway, we do have very little inflation from what the Federal Reserve is telling us. But remember that they tell us that, it's right, at Whole Foods they'd pay $800. And we have a market here called AJ's here in Tucson, which is the upscale, similar to what Gelson's used to be in Beverly Hills, where it'll be closer to 12 or 1500. Every Sunday morning, Sarah and I go right after church. We go to AJ's to pick up some. I like to buy dandelions, which are a weed that is actually a good salad. It's an Italian salad called, the Italian word for it is radici, but it's basically a dandelion, and it's made with anchovies and boiled egg. You don't need to know that anyway. The only thing is that it's really it's interesting when you go there, because we know the butcher there, and he was putting out some fillets, little 9-ounce fillets. Each one of them was $42 a piece. And I said, do you sell any of them? And he said, yes. He said, I put in 3 trays a week, or 3 trays every Sunday. And on each one was about 40 fillets. So they're selling about 120 fillets at $44 a pound. And it's only the 9-ounce pound too. So it's really amazing, the price of some of the things that we have going on through here. So we'll have to wait and see. Anyway, the one thing I wanted to start with was this dollar index, because it's so very important. And we've got a couple of these that are, banging up against major support, mainly the Canadian dollar, the Swiss franc, and some of the others are very close. Also the Australian dollar, New Zealand dollar. All of those are getting very, very close, as well as the Japanese yen. We've looked at the Japanese yen recently, and that's also what we've been watching. Now, we're expecting a bottom to come in this week, which it certainly did on Sunday night. We had a very, very strong day, up 1.5% yesterday. Not surprising, because, we had been down sharply from November the 3rd, and this is nothing more, in my opinion, than a snapback rally. If we look at the New York Stock Exchange Index, it hasn't even bounced hardly at all. I mean, it had a very, very meager bounce yesterday compared to what happened to the leaders of the pack, which are those stocks in the S&P 500 and the few stocks in the NASDAQ and the few stocks in the Dow that make the things run. Remember, we opened lower in Apple, down to about the 110 level, and it itself rallied 4% yesterday. And in fact, a little bit more than 4%. So that's how it gets started, and that's what it's supposed to be doing. But if this is correct, and my bearishness about this market because of what's happened to the New York Stock Exchange Index, that I've talked about so many times here, I don't want to repeat it over and over again, but it's worth repeating. And it's got a pattern that says that we are going down, and we're going down hard. Now, if we are strong all this week, and we take out those highs from November 3rd, then all of this that I've looked at is totally wrong, and I've missed something really, really big. This pattern is so clear that if it doesn't fulfill itself, then then I've got a big problem about what I'm looking at, because this is certainly wrong. And one of the things you get hooked up with is you don't want to get tied up in your expectations, because your frustrations in life come from your unfulfilled expectations. And so my expectation is we're not going to take out that high of November 2nd, but that doesn't mean that it's not going to. We'll see if that's going to be the case. Now, one other thing that I wanted to mention that I think is worthy of some thought, and that is Nigel Ferguson, who is the professor from Harvard, who's does finance, and he's really a smart fellow. He was on Bloomberg today, along with Mohammed El-Erian, who was the gentleman that helped run Bill Gross out of business, I guess, or at least to another firm. And they were talking about how this terrorism stuff is affecting the world, and it really is a tremendous negative draw on what's happening in France, and it could also happen in in other countries also. So we have to all be alert to what's going on around us, and keep a wary eye. One other thing that Sarah brought to my attention today is there's a couple of websites that are out there that are trying to donate money for France, and they are malware. There really are very, 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 very bad sites. So be really careful of opening anything that you're suspect of, because there's some really bad people out there, well, as you can imagine, but you don't want to get hooked up with that. I've had to go through that a few times in my life, and that's not a fun thing to really go through. So we are getting now a little bounce yesterday and today. How much more we're going to get, we'll have to wait and see. But we do have some really negative things happening. As far as the euro is concerned, that's being the major cross rate against the U.S. markets. And just give me a second. I had it here and it disappeared. Where did it go? There she is. Or there it is. I should refer to it in the plural. Hold on a second here, and you'll see that we're trading below the 107 level now, which means we're getting very close now to our longer-term price objective down there, about the 99 level, which is the 61% retracement of this move. Now, the euro's had tremendous moves, in the last 20 years. We really started trading it really actively in 99. That's when it first came out in the trading. And, then we went from 99 all the way, well, we went down to 80 is where we bottomed in 2000. And then we went straight up to 2007 during the, right before the big crash of the too big to fail banking deal. And that went to 160. And then from 160 now we're down, getting close to 100 again. So there's wild swings in the euro all the time, and it's really good to trade it on a shorter term basis too. If you like to trade 15 or 30-minute chart, it trades probably 5 times better than the S&P 500. We have another one of the markets that we're watching really closely that came down yesterday and tested the 786 level, and that is the crude oil market. We went down to almost to $40 a barrel, and then we quickly rallied $2 a barrel. That was they were saying that was part of the reason for the rally in the stock market. And if you believe that, I still have 2 shares of the Brooklyn Bridge for sale, because that, I don't think, had nothing to do with it. It was mainly a short covering rally, and I don't think it had anything to do, with the price of the crude oil, because stocks were still rallying crazy when crude oil was, dropping like a rock. So that I don't think one had anything to do with the other. The other thing is there's very little correlation between the euro and the U.S. stock market. If you just look, the euro has been coming down for 2.5 years, and stocks have been going straight up for 2.5 years. So there might be some short-term correlation intraday or for a day or two, but longer term, there's just not any correlation in those markets. So don't let anybody that you hear on TV try to tell you that, because that's not really what's happening. Okay, I'm going to take a little break now. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look now at the gold market, and we'll look at all the metals and gold, silver, copper, platinum. They're still heading lower. We had the rally yesterday in gold. It almost got to $1,100, and we've since backed off to below, down to $1,170 and change. It looks like we're heading down to the the 1049 level, where we might come into some pretty good support. But I don't really see any reason to be a buyer of the metals in here. Both gold and silver appear that they want to go lower, and of course we still believe that this still going down. I mean, we had a beautiful ABCD pattern in that gold up at 1192 just a few weeks ago. We've broken more than $100 an ounce in a matter of 13 trading days. So it tells us that the market is tremendously weak. If we take a look at platinum, we're seeing pretty much the same thing in the platinum market. Looks like it wants to go lower. We made a slightly lower low yesterday and then rallied about $10 an ounce, but still it looks like we are heading down to complete some of these patterns just a little bit lower. So just remember that all of these commodities that we're looking at, folks, are just under a great deal of pressure. And it's not just the metals. The grains have been under a great deal of pressure. Even the cattle and hogs have been under a lot of pressure. So there's deflation coming in, and deflation is usually characteristic of either oversupply or lack of demand. And we don't think it's oversupply in some of these things, but it certainly could be. But the demand should be coming in, from countries that supposedly use these products in large quantities, like China and other parts of Asia, India, and that's not the case. So that in itself is pretty bad. The one commodity that we look at, of course, is the price of copper, because it's so related to just about anything electronic. And as you can see, we're looking at a price of close to 208 a pound. Right now, we're trading around the 212 per pound level. So we're within, a very, very short distance of where we could get down to this level, and then we might have a, pretty substantial rally from this level. But right now, there's not any commodity that I see looking at the charts that looks, anywhere bullish at all. Even crude oil, even though it's trying, it made a lower low than the previous day. It rallied $2 a barrel yesterday, but it couldn't follow through, and that's another sign that if it was really a bottom, then you most probably would have been able to see that you would have a follow through, and we certainly have not followed through on the crude oil. We're still we're down about $1 a barrel from the high that we made just the other day. Now, another key market that is very important to all of us, because it's the largest of all the commodity markets that we trade, not counting Forex, of course, but just looking at the commodity market itself. The Treasury bond market is getting very close to making a beautiful 61% retracement in the move that we made from November the 9th. We rallied 3 points, and this number comes in very, very close to, I think it's 152 and change, as I recall. It's around, no, it's not too far from where we are right now. Well, it is a little farther. It comes in, let me do it a little quicker here just to do it correct, and I'll try to post this for us so we'll be able to see it. Right now I can't get it done, but it's down about another half a point around the 152.15 level in Treasury bonds. We're going to have a really nice Gartley at that point, and it's 10 days from the low that we made back on November the 9th. And so that's a place where we could see, the Treasury bonds find some pretty good support for this level. Same thing is true in the notes, but the bonds are, they're a little more volatile and they're better to trade than the notes. But you want to watch these Treasury bonds at this 152. 15, 16 level, because that's a really nice ABCD Gartley pattern forming at that time, and it should be watched. I'm going to be watching it, of course, because I like the Gartley patterns, but it's going to be a real interesting one. I believe that I have this ready to be posted. I'm hopeful that I have, but so far I can't find it, but I will find it after the break, hopefully, and get it up here so that we can see it. But right now I cannot find it. Boy, I tell you, I put these things in order, and for some reason when I put them in, they just literally slip away from me, and it makes it a little more difficult to pull these up, which is a little harder than what I like to do. Okay, we're still having a little bit of a rally here. We're getting ready to open here in the stock market. Probably have a little bit more of a rally, but we've had 2 days. We shouldn't get any more than 3 days if we're really bearish, folks. That's what it looks like for me. So we'll be right back right after we pay a few bills. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization
memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, we are opening up a little weaker than market was expecting. Whether it's going to have anything to do with any fundamentals or not, who knows, but I don't understand fundamentals. All I know is that this long-term chart that I'm looking at right here is the whole ball game for me. Just give me a second here and I'll get the ball game started. There we go. This is the most important chart I've probably seen, without a doubt, since the chart of March the 9th of 2009. That's when we had the 3 drive to a bottom pattern. This pattern is so clear that it's just basically indisputable in my opinion, but I might be wrong. If we take out the highs of November 12th or November 3rd, I will certainly be wrong. We are coming in to the area of let me try to collect my thoughts here, folks. We're coming into the area where you have some strong bullish days, particularly the day after Thanksgiving, which will be on the 26th. That's 9 days from today. That day is the 75% of the chance the market closes higher on that Friday following Thanksgiving. That's known as, of course, Black Friday, but we'll wait and see. Now, I mentioned yesterday there are two things that we have to remember to see if the market is going to be as bearish as I think it is. So the first thing is we want to watch for the retracement. Thus far, we haven't even made not even close to a 38% retracement in the New York Stock Exchange Index. The second thing is we want to watch to see how well the market handles good news. If the market has good news and it doesn't rally, that's a very, very bad sign. We saw this with Alibaba last week, and we want to watch that very, very closely. The same thing if it's something very negative to the market, like we had with France. That certainly was negative, I believe, and market rallied, but the market was down 8 out of 9 days, so it was incredibly oversold coming into that, so it was due for a bounce. So we want to watch that very, very closely. People have talked on the financial press about what happened in France being similar to what happened in 9/11 in New York when we lost the World Trade Center. I mean, we lost 2,800 people that day, as opposed to 100 and some. But that doesn't make any difference. The numbers are insignificant because 1 or 2, it doesn't make any difference if you lose someone. It's terrible. So we have to. I don't get on my soapbox today, but I believe that we should be just like what Israel does. If you live in the country, you're a soldier, and that's what you have to do. You have to live it. And I believe, as soon as we were able to fly in 2001 when we had the 9/11, the main thing was you just literally had to get out and fly. I had a flight. I flew to Las Vegas, Tucson to Las Vegas, round trip, $25 during that time when there was nobody flying. I came back from Las Vegas. I was there a couple days playing poker, and guess what? The flights to Hawaii, my daughter and my son-in-law and my grandson were living in Hawaii, and I could fly round trip to Hawaii for $160 round trip, and I stayed in a 5-star hotel for $85 a night for a week. So it was really, really a lot different. So anyway, this is what we're doing. We have to stand up to the people. Don't be scared. One of my favorite quotes comes from an old Nordic Viking saying is the coward dies 1,000 times, the brave man dies but once. And that's what you want to do, is try to live your life that way. You can't live your life in fear. Remember what Tony Robbins has always said, fear, the acronym for that is false evidence appearing real, because 95% of all of our fears, never come up. And that's one of the reasons why people have a hard time in trading, because they have a fear of loss, fear of missing a trade, all the different fears that come out. You just have to try to get rid of those. And it's a difficult time to do that, to beat the mental part of it. My good friend Mark Douglas, I've talked to him 3-4 times a week forever, and don't talk to him anymore. But I sure miss him a lot. But he always, would factor in to the fact that how much fear, was involved with this. If we all did this for paper trading and just paper money, everybody could make money. But because we keep score with money in our business, that's what makes it, more difficult to look at. Now, we should have some support coming in to the S&P down around the 2045 level. We're relatively close to that level right now, so we want to watch it. But I think the key thing is to keep an eye on these treasury bonds, because the bonds are a much larger market, many times larger than we have with the with the indexes, and we have a lot of support there at that 52.16 level in the bonds. And I believe when the Fed does raise rates, whenever that happens to be, either this century or next century, the bonds will probably rally, because it's already been factored factored into the market. We've got another market that's approaching a very important spot right now, and that is the crude oil. We're almost we just hit it. We just hit the 61% retracement in crude, the Christmas crude at 40.88, and we're now trading at 41.02. We jumped a quick 15 pips right there, but whether that's going to be much of a bottom or not, but it's certainly a low risk spot right here, because if you buy the crude at this point, you don't have to risk very much from this level. That's the primary thing that I think we're looking at. And I did want to mention that Mark's book is coming out on Kindle, I believe, next week. Paula told me. So if you want to have an interest in that, if you go to Amazon, you can get it on Kindle. That's the only way it's going to be available to start out with, just to get an idea of what's going on with that book. It's the book that killed him, folks. It really did. He just put his whole heart into it. Took him 3 years to write it. I thought he was done about a year ago. I told him, I said, stop writing right now. I said, you've got a great book. But he kept trying to perfect it, and fortunately he kept writing, because when he writes a book, one page, he's probably written 8 to 10 pages to condense it down to that one page. That's how precise he was, with his calculations and his interviews and stuff that he did. So it's an incredible piece of work. And I told Paul, I said, all those pages have great information in it, so you've got to figure out some way to put a little pamphlet out to folks to let them know that the things that he put in there, the research that he came up with, was just really fantastic. So that's the primary thing to oh dear, I gotta stop thinking of him. Anyway, we'll get on. Just the trouble is, one of the trouble of getting old, folks, you lose so darn many friends. I'll tell you, this year's been a real bummer for that. So we'll have to maybe turn that around one of these days. But I guess as you get older, that's the only other alternative that you have to look at. I wanted to. Someone asked me a question about the long-term pattern that in the stock market, and I wanted to bring that up because, it is part of life. It's the roughest part. The part about getting old is when you're in that 8 furlong race and you're at the 7 furlong, boy, your mind starts to play tricks on you about, my gosh, where did the time go? And frankly, folks, I will tell you this, without a doubt, I have really been blessed. I mean, I've had relatively good health most of my life. I said 3 great children. Where did I miss one? I have 2 great children, 2 beautiful girls, and a lovely wife, some great grandkids and stuff. So I've been pretty lucky. And everybody goes through some bad stuff, but I'll have to wait and see. When we were little, we attended a lot of funerals because that was a big thing in the Italian family. But anyway, they don't have those anymore. Everybody's cremated pretty much. So, well, most of them anyway. One of the jokes was Father's Day. Whenever the phone would ring on Father's Day, one of my girls would pick up the phone and say, "Okay, which one of you people think that you're my father's your father," or something like that. And it was got to be a big joke. Okay, I wanted to share with you. Someone's asked a question about the getting off the track this week, getting a little too maudlin and sentimental here. This thing with the terrorism really bothers me, folks. I hate to see stuff like that happen. I was really bothered by the one in 2000, in 9/11, and it was a very, very bad situation. And can't believe it's been that long ago. But I remember I was on the phone with Arch Crawford just as the first plane hit. And 10 minutes later, Arch called me up and said the Pentagon has been bombed. And we didn't hear that on CNBC for at least 15 minutes. The S&P was still trading at that time. It was around 5:30 around 8:30 in the morning, New York time, 5:30 here. And the S&P was still trading. And I was already short, but frankly, I didn't sell anymore. I was just basically frozen. And then the market went down, and then it closed. And of course, it closed for 5 or 6 days. And then when it reopened, we made a low just a few days after that. And then we rallied for 4.5 weeks. We rallied up to the 61% retracement of the previous swing, and then that pushed us down into 2002, early 2002, where we made a 3 drive to a bottom pattern, and landed there. Now, the thing that I mentioned about the pattern between what I'm seeing now in the New York Stock Exchange Index and the one from March of 2009, that's very, very, what you're seeing on that New York Stock Exchange Index that I just posted, that's the exact upside down pattern of what we had in March of 2009. It was that same pattern. Three drive pattern, and we had all kinds of Fibonacci numbers coming together and stuff. So we'll see if that's going to be the case. But anyway, that's what we're looking at in these markets. They have such a bearishness when you look at all these different stocks. I know we have these big rallies like we did yesterday, and if you remember, you probably can't remember back this far, but back in 2008 on the way down, we had the biggest rally we've ever had in the stock market. One of the days when Henry Paulson came out and said, we got everything straightened up, everything's good, and the market rallied, 770 points, 777 as I recall, in just a matter of one day. Between bottom and top, as I recall. And then what happened? A few days later, they needed more money and say, oh, all bets are off, and bada bing, bada boom, there they went down again. So you expect to see some great volatility here, because you'll think that you're going to see some things that I think will be record-setting before we finish this, and this will be caused by quantitative easing would be my guess. One other market that you need to be watching, which is related to the money, and that is the fact that we have these junk bonds that are looking very, very bad. They're getting ready to make new lows. That means higher interest rates, which we've already seeing this across the board in all of these things. So that's another one that we want to be watching, very, very closely. That's the main thing, and that we're watching when we're looking at some of these things. The VIX index, is still showing virtually no signs of fear. Which is another good thing if you're bearish, because if you get too many people bearish like we had way back in on August the 25th, you're going to get a market that's extremely, oversold, and we haven't had that yet. So the fact that the market has not rallied very much from this bottom tells me that there's very little fear in the market. If you want to see some bearish charts, folks, just go prove it to yourself. Just go to look at EEM, which is the emerging markets. Look at the FXI, which is the Chinese market. All of those are heading down in big time. These are the rallies that we had were pathetic, considering we made new highs in the NASDAQ, almost made new highs in the Dow Jones. We made a 61% retracement in the New York Stock Exchange Index. But if you look at what these other indices did across the world, including Germany, Germany had a nice rally here, rallied 500 pips between yesterday's low and today's high. But, overall, it's still a considerable lower than where it was. And, the FTSE, the 61% retracement on the FTSE was 6,400. It's trading at 6,200. So these markets are not they're not as nearly as bullish as the people on the financial press, are trying to feed us. You can only eat so much tapioca, and then you realize that you've had too much. We learned this from the Days of Ends nursing home here in Tucson, Arizona. So we'll have to wait and see. We have some really comical people here in the den at TFNN, and it's sometimes the stuff that they post is incredibly funny. Now there's a market that has already, I believe, we talked about this yesterday, and it's already started to turn down. If you'll give me a second here, I'll pull this up and we'll take a look at it. And that is we have a lot of these: the Canadian dollar, the Swiss franc. They're all Australian dollar, New Zealand dollar, all at really critical spots. So you want to pay attention to it if you trade forex, because we're getting to some key levels here. The euro still looks like it wants to go lower, but that remains to be seen. We'll wait and see. Now we do have some good support at 2045 in the S&P. We'll see if that holds. So far, that's been the low of the day, 2046 and a quarter, I believe. Okay, we're going to take a break here. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back, and we are having a little bit of selling in the market. So far, the 2045 has held in the S&P. That's really an important spot, folks, because that was the fib number coming off of the previous high that we made midday on Friday, and we went above that by quite a bit, so we came back to retest it. If we go below 2044, that would be equivalent to us going above 2030 like we did yesterday, and that just tells us that we went higher yesterday. That would tell us that we'd be going lower today, but it's still early. You can't really say too much about it as of yet, but we'll wait and see if this is going to be if this is going to be a reversal day. Remember, we were expecting a 2 to 3 day rally coming in this week. We certainly had a rally yesterday. We started off pretty good last night. So far, we're basically unchanged a little bit. Pretty much not much going on, but it's still early. So 3 days would be the most we would expect. And we have a key change in trend day on the 17th or 18th, which is today and tomorrow. We have Neptune, which is out there, and that's one of Norman Winsky's favorite. And it's going into retrograde station, as I recall. And so that'll be an interesting spot, to take a look at some of these things, if that's all we get is a few day rally. Watch the crude here at the 40.90 level, because failure there, we could easily start to break down rapidly, and below 40.60, tells you you're probably going to now make another low. So the crude oil, gasoline, and heating oil are not telling us that this market is turning. So we got to be very careful if you want to try to buy some commodities, because there's no reason to really stand in front of these things to try to buy them. We got gold at 1078. It's got a target at 1049, another $30 lower. We're already $20 lower than we were at our highs yesterday. So there's certainly not any bullishness come in. The key thing to watch, in my opinion, today, folks, is to watch the Treasury bonds at 52.16 and the Christmas bonds. That's the real key fib number over the last 10 days. It's been trying to get there little by little, and that would be one that I think would be very, very important to look at. And also, going below 2044 in the S&P would be a pretty negative thing. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.